Welcome back, everyone. And today I'm going to have my co-host, Julie. How are you,
Hi,
Julie?
good morning. Fine, Wing. How are you?
And as always, we are co-hosting this podcast. And so welcome once again. And Julie is one of our network investor members. And in fact, I'm going to talk about this market, which Buffalo Niagara Falls, which Julie has purchased a nice portfolio around 3 years ago. Julie
Mhm,
a total of 6 rental properties. Julie and her husband, Mark,
mhm.
and several of them are regular conventional financing, and several of them are she purchased using the self-directed IRA. So let's spare the details right now. We will all experience, be at very high level because
Mhm, sure.
you and I talked about quite a few times.
Mhm.
Let's do a short video on this week's listing. We can go over one pro forma. So
Okay.
with that in mind, let me share my video and let's get going. And of course, this topic today is accelerate your retirement with these low cost cash flow rentals, even with a low paying job. Low paying
Mhm.
job, what does that mean? If you only make like $50,000 a year or higher, if you have a low debt to income ratio, if you have a good,
Sure.
like 700 FICO score or higher, very low of no consumer debts, no credit card debts, no car loans, student loans, none of that. And you have a down payment, of course, you have at least 20 to 15% to 25% down payment. We could talk about that.
Mhm.
Yeah. So in a low salary, W-2 salary, whatever, or self-employed, with a good DTI, debt to income ratio of hopefully 45% or less, with low
Right.
that if you qualify with a credit score is 700 or above,
Mhm.
then as long as you have the down payment, you can scale your risk investing as an investor quite easily. You can be mind boggled about the potential in this investment methodology. So without further ado, let's go quickly. Okay, we'll stick this with a 10-minute presentation if possible. Okay.
Okay.
So we're talking about investing for cash flow, investing for in the Midwest market, Midwest housing market. Over the years, thousands of real estate investors all over the country, right? They have entered this kind of market mainly for cash, which is fine. So these are typical Midwest market that investors over the years have found that produce very high cash flow. All right. Obviously, I don't have any team available in some of these markets. Our team
Mhm.
is available, Julie. If we can focus on Buffalo Niagara Falls, which is part of this whole region of the Midwest housing market. All right. So
Mhm.
skip some of these slideshow, but of course, also when you watch the video, you just pause on this slideshow.
Mhm.
One, we're not going to go over this. It takes too long. We cover this quite often in other videos, Julie and I. But when you buy any kind of rental property, you have 4 ways to make money long term. Cash flow is just the foundation
Right.
of the investment. But if you invest over time, you're getting a whole bunch of other profit centers, profit tax benefit, increasing cash flow, passive income, appreciation
Sure.
potential, and using the power of the 30-year fixed rate mortgage. And of course, most of the profit people see is above the
I
iceberg, which is
right.
the rental income, the cash flow, and appreciation. But most investors, especially newbie, miss the point. They do not understand. They fail to see the below the iceberg is about 70% of all the returns, which is paper loss depreciation,
I
using power of leverage,
Mhm.
the power of 30-year fixed rate mortgage, and and equity growth have the tenant pay down your principal, take
Exactly.
for you over time. So that's the beauty of investing. So, but for Niagara Falls, again, some of you may be surprised. It is, according to Zillow, number rank real estate market 2024, uh, among the top 10 hottest housing market. So,
Mhm.
right, Julie, when people look, regardless where you're located in the U.S., most of our investors are located in California and
Mhm.
other high cost markets. So the numbers does not make sense if you try to invest in your local market, right?
Correct. Correct.
And Julie, you're no exception. Julie, you live in Southern California.
Right.
Please share with the audience how you live in a high cost market in Southern California. And I live in the San Francisco Bay Area, very high cost market, obviously. You were able to buy 6 rental property 2,000 miles away, stuck unseen,
Right.
seeing long distance, remote, relying on the property manager. Tell me
Right.
quickly from high level, how are you able to successful scale your portfolio 3,000 miles away?
That's so interesting because we would have never thought, had we not met you, been introduced to you, we would have never thought about moving or not moving, buying across the country. Now we knew we didn't have enough to afford anything in California, at least not where we live. In Southern California, we figured we'd be in some remote area that doesn't make any sense. But after having met you and realizing, because we started looking right during the pandemic or shortly after the pandemic had started. So there's this new thing called Zoom. You can see pretty much anywhere in the world via a computer. We took your advice. We found some areas that we thought would work best for our needs with the assets that we had, and everything basically we did through a computer and through our phones. I think some people find that really hard to believe. I've never been to New York, and all of our properties are in upstate New York in the Buffalo Niagara Falls area. So people are just like, how can that be? But I even learned how to drive the streets on my phone through Google Maps. You can just go through and see the area, and you can tell where it's sketchy or it's not okay. Yeah, that's how I learned the area. And then after a while of looking so much, you begin to learn the area just like in the area that you live in. Okay, stay away from those streets. Or if you go too far this side of the hospital, it's not going to be great. So that's really how I learned it, just by looking at Google Maps and talking to the team that you have set in place in Buffalo Niagara Falls. And they were wonderful too. They really helped a lot.
Very good. Very good to hear. So with that in mind, I'm going to go over momentarily one of the sample property for this week, and it'll blow your guys' mind. All right. This is the sample pro forma I'm going to cover shortly. Is a typical property that Julie and Mark have purchased years ago. Furthermore, I know a lot of real estate markets have appreciated a lot during the pandemic, and Buffalo Niagara Falls are no exception. Your property have grown 20, 30, 40% in appreciation totally in about 4 or 6 of your rental properties in about 3 years. I know, look, this housing boom back in 2021 is an anomaly. It's a once in a lifetime occurrence, but no one knows the future. We don't know. We cannot predict the future. Again, to quickly go through this, you find a team. So we have a team in Buffalo turnkey, and they do all the work from the beginning to the end, and they rehab the property. They have a property management, the whole team. That's why we trust the team. That's why you trust the team.
Yes.
They've been doing so well for you. At the end of the day, on every month on your 6 rental properties, how many hours you spent in managing your portfolio?
I know, managing my portfolio, really less than an hour at this point. Now that I've learned what to do, and really it's just when the receipts come in, we plug them into a software that you taught me about, the property tracker. And like I said, it takes me less than an hour now to do that.
Okay. I just want to reassure the audience that Julie did not stutter. Julie, 6 rental properties on an average month, you spend approximately 1 hour in managing your real estate portfolio, right?
Yes, 1 hour a month, not a week or a day. Like just once a month when the receipts come in, when the rental receipts come in.
Just to clarify, very good. Well, we'll leave it at that, and let the audience ponder what you just said. Okay, so anyway, so this is a typical off-market portfolio that come out of Buffalo Turnkey. Okay, so I'm not going to go over all the details. So every single week, they have approximately 60 to 80 off-market listings for real estate investors to evaluate and pull the trigger. A lot of the investors, they do financing, 20 to 25% down payment financing, or even 15%, which can cover that. But many other investors coming over the country and over the world, they come into this specific turnkey provider and they buy with all cash, or using their self-directed IRA to purchase, like you and Mark did.
Correct.
I believe you purchased like 2 or 3 rentals through your self-directed IRA.
Two. Well, Mark has a duplex in his, and I have a single unit in mine.
Okay. Yeah. Again, some of you are thinking, I didn't know you can use your IRA to buy alternative assets such as rental properties. We just found out, but we're not going to go over that. Julia and I have done a number of videos that talk about using your self-directed IRA to buy properties. So we're not going to do that today. But again, every week there's a off-market listings available, what's available, and what are the stages of the rehab. Some are completed, some are under contract, some are future. That means they are being rehabbed as we speak. As an investor, you have an opportunity. If you're part of our network, if you are interested, I can help you evaluate which property you can pick and choose. They're already, so forth and so on. That's Buffalo Niagara Falls is below. Again, same situation. So every week, there's an amazing turnkey, off-market, rent-ready, tenant-in-place cash flow from day one using financing, which is amazing. So anyway, Buffalo Turnkey, they've been around for more than 30 years, actually.
Yes.
They have a great track record. We trust them. A number of our investors from our network have consistently purchased in this market for the past several years. Again, this is the highlight. I'm not going to discuss this. Lack of time. So you can pause this slideshow anytime when you replay this video. With that in mind, again, there's some additional highlights. You can, like Julie said, how cool is that? How cool is to manage your budget? It's almost 100% passive. Almost 100% passive. So you can focus your time, spend your time that's important to you and your life. Okay.
Exactly.
Yeah. So that's the key to become a successful investor over time, because you can focus on what's important to you in your life and focus on that, and not become no need to become a full-time real estate investor. So that's ridiculous. Okay. All right. So without further ado, again, let me go through this slideshow so you guys can understand what's an amazing situation we have here. You go through the process, appraisal, inspection report, get financing. We have all the resources. We're not going to with that. Again, the road to financial freedom, the road is financing. Amazing 30-year fixed rate mortgage. So let's go over this week deal, October 2024, as we speak. How time fly. Yep. So this is current listing for this week, and suffice to say, this Buffalo Turnkey, they have various listings: some single family home, residential listing, some duplex, some triplex, some fourplex. So today we're going to focus on that. Let me move this over here. Again, these are very old properties, 80 to 100 years old, but the foundation is good. Everything has been updated. The roof, everything rehabbed by this great turnkey company. So that's the assumption you have to take. So to highlight, some of you can be mind boggled. Okay. 54. This imagine 50. Is this a misprint? Did I miss something here?
No. And that property price is very much in line with the prices that we paid for all 6 of our properties. So I want your audience to understand that's not a one only. Like when you're looking for a car and you find the perfect car and you go to the dealership and they're like, oh, we just had one and it's gone. No, this is not that case. This is one, it's a representative of several hundred properties that they have available in that Niagara Falls area. So that's a very real number.
Absolutely, Julie. You have some of your properties or look something like this. When you bought it 3 years ago, obviously the rent has increased. So you get cash flow, and the property have appreciated in value quite significantly in the past 3 years. Again, past success is not a guarantee of future performance. You and I want to be very transparent and full disclosure, right?
Absolutely.
There's risking in any kind of investment. You guys watching, do your research and do your due diligence, whatever you need to do. Don't you trust, but verify.
Correct.
But with that said, I highlight this week's listing. This is a turnkey property already rented, and this price is firm. This is the selling price by this seller, this wholesaler, which is a turnkey off market. So you can't find it in the multiple listing service. You have to go through our work. You have to go through our network, go through me, contact me directly first before you, and I'll walk you through the process, and I will go through our system process and procedure, whatever. But let's go over this. Is mind-boggling numbers. $4,000 already rented for $850. Okay, so I done. This is just a pro forma, just a projection, monthly taxes, insurance, property management fee, and I gave it a 3% appreciation projection. Who knows about the future projection appreciation? No one have a crystal ball, but I put a vacancy of 5%, which is pretty realistic. And the maintenance, yes, you could pay 5% of maintenance on an annual basis from the gross rent you collect. You collect, that is. At the end of the day, and look, okay, I'm going to go over 3 numerical formulas. Okay, I'm not going to bore you, but let's do real quick, Julie. How do you calculate right from the beginning? What's your expectation of earning potential? Okay, single family home under family lending guideline. Normally, people put 20 to 25% down. This is the benchmark, if you will. But I took the liberty. So look, some of you are very newbies. And you could really do this, right? If you are very inexperienced, if you're never done anything before, and you lack sufficient capital, right? If you lack down payment, it's not like you have hundreds of thousands of dollars of cash to use a down payment to buy multiple properties. So or limited with your capital for whatever reason, and you're a beginner and you try to scrape up savings, or you say, oh, I only have $15,000 of cash to buy investment property. You think I can do it? Yes, of course you can do it.
You can.
Yeah. If you go to our system, yes, you can. All you need is a 15% down payment. Why I put down 50%? Normally 20%, but 50% is doable. It's under Fannie Mae lending guidelines. That's one condition. You have to pay a PMI, private mortgage insurance. If you pay less than 20% down payment on an investment property, the PMI itself is a very low fee. It's only like $20, $30 a month. No big deal.
Wow.
So do not be scared off by the PMI. So I'm using 50% down payment, pay your PMI monthly, but once your value of your property increase to 80% loan to value LTV, the lender would take out the PMI.
That's true.
In the future. So wait a few more years, once and if this particular property increase the value to the point of 80% loan to value, then they can take out the PMI, that you'd be rolling along with your cash flow like you normally would. So anyway, 15% down payment multiplied by the purchase price equals $8,100 down payment, right? You pay your original fees $1,000. You pay your closing costs $3,000. Nothing else. Total initial cash investors total out of your pocket, 12 grand. What other asset were out there? You can purchase a $54,000 asset income property in a growth market for only 12 grand. The power of leverage. Julie, any additional thought about this amazing power?
That is really amazing. Even with only 15% down and paying the PMI, you're still getting a positive cash flow, which again, we talked about, that is the tip of the iceberg, but you're still getting a positive cash flow out of property that you bid out less than $15,000. That's an amazing asset.
Yeah, Julie, not only that, some people think, oh, all the way until the mortgage rate comes down to 5% before I will buy investment property. For that, I will say BS.
Yeah.
Like BS, okay? That's an excuse. Because when you buy a low-cost investment property, whether it's a $300,000 investment property, $50,000 investment property, the difference between 7.5% versus 6% is only about $20 per month.
Right. Yeah, I was going to say, it's really not significant on a property valued at like $54,000. Yes.
Yeah. So when you buy a low-cost rental property, the mortgage rate really are irrelevant.
It really is.
Because it's all about the return. It's all about positive cash flow. Okay. So as we conclude this presentation, let's discuss this metrics. Okay. I know especially when you're a newbie, you may not fully understand. I will explain to you in a most simplistic way, in layman term, why this metric is important to you. Okay. All right. So Julie, anyway, the benchmark was 12,000. Your total out pocket is 12 grand. So you calculate return based on your down payment. It's not based on your purchase price.
Right.
With that in mind, let's go over rent to value ratio. The benchmark for rent to value ratio is 1%.
1%.
1% multiplied by the purchase price, it equals great benchmark for cash flow, regardless of payment. But in this case, the rent to value ratio is 1.6%, which is off the chart, and hold on. Okay, do the calculation. You're very simple. Look, this is 6th grade math, all right?
Yes.
This mathematical calculation is not rocket science. All right. The next thing is capitalization rate. A typical cap rate, again, I'm not going to go over the formula. It's like a 5% cap rate, but in this case, 13.1%. When you see a double-digit capitalization rate, it's just amazing. Again,
that's amazing.
I'm not going to go over the cap rate. It's too complicated. Okay, cash and cash return. It's 23% in about what? 4 years.
4 years.
You recapture all your down payment. That's the purpose of the cash and cash return, right? Here's the point. Monthly net cash flow at 232 times 12 months. At the end of the first year, your annual net cash flow is 2789, right?
Correct.
And then you get some economic benefit with a principal reduction,
right?
And some tax savings. The tax savings is not zero. It's probably a couple of $1,000 tax savings because of paper write-off depreciation. Again, we're not going to discuss tax write-off, but I could very well put $2,000 or $3,000 under tax savings on an annual basis due to depreciation write-off. But I'm going to be very conservative, right? And then, I factor in 3% annual appreciation. Pretty realistic, right? 3%?
Very realistic, yeah.
So 3% multiplied by 54,000 at the end of the first year, your annual appreciation is 1620. All right? So far, so good?
Correct.
On paper appreciation. So at the end of the first year, your annual net cash flow, this amount, plus principal reduction benefit, this amount, and the first year appreciation, this amount, equals gross equity income 4832, equals, I might as well pay higher amount tax savings because this is zero, should have been a couple of thousand, right? Depending on your tax situation. Everybody's tax situation is different. But anyway, the conservative approach is your total at the end of the first year is 4832, okay? 4832. That comes from your annual net cash flow first year, and then the first year, principal reduction, and on paper appreciation at 3% at the end of the first year, 1620 equals 4832, divided by your down payment, $12,100, equals total return on investment of 40%.
Wow.
That's all you need to know right now. Julie.
Wow.
That's all they need to know right now. End of the first year, all your total return is 40%.
That's amazing.
Julie.
Unbelievable.
On a historical basis, what other investment asset class out there in the universe you could achieve 40% return on your investment at the end of the first year? Tell me.
I don't think there is one. Not to my knowledge anyway.
CDs and money market, 1 to 2% maybe. Mutual funds, bonds, and government treasuries, 5% return. On a higher risk mutual funds or stocks and bonds individual portfolio out there in a stock market in Wall Street, maybe 5 to 7%, right?
Right.
Per year annual return. But compared to this real estate asset class, we're getting 40% return at the first year. 10x other asset class.
Unbelievable.
This number does not lie, right? I know this is only projection, but this is
sure. But I think it's a very realistic projection. You're not having these outrageous, like anticipated returns or whatever. I think they're very realistic returns for that particular market. And we have experienced those benefits in that particular market. So yeah, and it's not outrageous at all.
Yep, I agree. With that in mind, again, this is something that I offer. Like if you're, look, I know many of you are newbies. This is a perfect time for you to look into something like this. Of course, contact me, Julie. I'm a values-based coaching advisor, and this is my contact information. And yeah, that's all you got to do. That's your first if something like this intrigues you. You don't have to be Julie, you don't have to be a a newbie, a first time investor, you could be a serious investor, and
That's right.
you can still use this Midwest Buffalo Niagara Falls portfolio to buy 5 or 10 properties in the next few years.
Yeah. And I think a lot of experienced investors don't even really understand or know about the turnkey approach. And so that to me is just priceless, just getting information. I know you put your information up there on how to contact you. I just really want to encourage your audience, just call, just reach out, send an email, something, because there's nothing, information is free and it's just invaluable. The information that we got when we first met you on that, you taught a class on a Saturday at our local city college here in Pasadena. The information was priceless. It really was. It really was. And I think people, you just got to ask. You won't know if you don't ask.
Yeah, you took the plunge. You and your husband interviewed me, and you took the plunge. You pay for my coaching consultation service fee, and at the return you make in the past few years, you pay for the fee 50 times.
Over and over again. Absolutely. It's true. It's true. People don't really understand that. And I know your fee is not anywhere close to what some of the gurus out there are charging. And as you said, we've made it over and over again in the 3 or so years that we've had the property. So like I said, I think people just got to get the right information from the right person. And I know you've helped us tremendously.
Very good. With that said, Julie, thank you for everything. So
thank you.
Audience, as we conclude, the audience out there, the takeaway is if you see a lot of any kind of value whatsoever, please like and subscribe to our YouTube channel, and also put your email on our website below you so you will become a free member of our investment network. So by being a free member, every day you will receive great content, free information about real estate investing and housing market, everything else directly into your email inbox. So you can continue to be a well-informed potential investor.
Absolutely. Absolutely.
And of course, contact me directly. You saw my contact information. I'll be more than happy to do a first free complimentary consultation to go over your goals, your objectives, your fear, your motivation, your commitment. I go through your finances, make sure you qualify credit-wise and down payment-wise and everything else. Thank you for watching.